Hello students, in present video I am going to explain about ninth problem from final accounts topic. I am making this video for degree students. I am taking this question from Kalyani Publications. Authors Jain and Narang. Previous videos links are available in the description box. Let us see the question first. Following is the trial balance of Ramlal on 31st March 2021. Debit balances. Bank 7,500. Purchases in brackets adjusted 34,96,000. Salaries 21,000. Carriage on sale 2,500. Carriage on purchases 2,000. Lighting 1,500. Buildings 1,35,000. Rates and taxes 2,000 rupees. Sundry debtors 40,000. Furniture 30,000. Cash in hand 1,250. Bills receivable 7,500. Stock on 31st March 2021 3,06,250. Debit completed. Come to credit. Capital 2 lakh. Bills payable 50,000. Loan 1 lakh. Sales 36 lakh. Discount 2,000. Commission 500. Sundry creditors 1 lakh. Come to adjustments. Rates have been prepaid to the extent of 600 rupees. During the year, bad debts amounted to 2,500 rupees. A provision at the rate of 5% has to be made on debtors. Building have to be depreciated at 2% and furniture at 10%. Goods purchased on credit taken into stock but not recorded in the books 5,000 rupees. Prepare trading account and a profit and loss account and balance sheet as on 31st March 2021. This is the question. Let us see the solution. Final accounts of sole trading concern we are preparing now. Trading account, profit and loss account. As these two are accounts, in one table you have to prepare these two. Balance sheet in separate table you have to prepare. So trading account, profit and loss account. These two accounts are nominal accounts. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, expenses and losses on debit side we have to show. Incomes and gains on credit side we have to show. First trading account you have to prepare. Then profit and loss account. Debit side expenses no. In trading account, direct expenses we have to write. In profit and loss account, indirect expenses we should write. Direct expenditure means the expenditure which is incurred to bring the raw material into finished goods stage. Means up to manufacturing, whatever expenditure firm incurs, that expenditure comes under direct expenditure. Indirect expenditure means after manufacturing, whatever expenditure firm incurs, it comes under indirect expenditure. Selling expenditure, distribution expenditure, financial expenditure, administration expenditure, they come under indirect expenditure. Credit side incomes you have to write now. In trading account, direct income you have to write. Direct income means the income which is earned by the firm during main course of business operations. For any firm, main income is sales income now. So sale is a direct income. Trading account credit side we should show. All other incomes are indirect incomes. Profit and loss account credit side we have to show. For example, interest received, discount received, commission received, rent received, etc. We will start with the trading account. First, debit balances of trial balance. Bank 7,500. Bank is an asset, not here. In balance sheet you have to show. Ignore. Purchases 34,96,000. In brackets adjusted. So instead of giving ordinary purchases, adjusted purchases are given. So what do you mean by adjusted purchases? Let us see this point with one example. See this example. In trading account, opening stock separately we wrote, closing stock separately we wrote, purchases separately we wrote. So we can know the gross profit easily. Gross profit is equal credit total minus debit total. 75,000 minus 70,000 is equal 5,000 rupees. But we cannot know cost of goods sold. Cost of goods sold means what? We sold goods for 69,000 rupees. How much were the goods we sold for 69,000? That is called cost of goods sold. Sometimes firm wants to compare sales figure with the cost of goods sold. Cost of goods sold amount is required to decide the selling price of goods also. But In this case, if opening stock, closing stock are shown separately, we cannot know cost of goods sold with the help of trading account. So when firm wants to know cost of goods sold with the help of trading account, then instead of showing opening stock, closing stock separately, firm adjusts these two amounts to purchases. Let us see the second example. See this trading account. What is the difference? Instead of writing opening stock, closing stock separately, we adjusted these two amounts to purchases. So purchases 50,000 plus opening stock total 60,000 minus closing stock 6,000, final amount 54,000. If you adjust opening stock and closing stock to purchases, it becomes easy to calculate cost of goods sold. So cost of goods sold is equal 54,000 plus 8,000 plus 2,000, directly 64,000 rupees. So if a firm wants to know cost of goods sold directly from trading account, then instead of showing opening stock, closing stock separately, firm adjusts these two to purchases. In that case, these purchases are known as adjusted purchases. So 54,000 is known as adjusted purchases. Adjusted purchases on debit side you have to write. Two purchases. 34,96,000 rupees. As adjusted purchases we are showing, in trial balance separately is not giving opening stock. And in trial balance closing stock he has given now, that amount we need not to show in trading account credit side. Because that closing stock already we have adjusted in this purchases amount. So closing stock directly in balance sheet under asset side we have to show. Next, salaries. It is an indirect expenditure. P&L account debit side, not here. Carriage on sale, carriage on purchase. Carriage means transport. This is firm. We purchased goods from one supplier. So from supplier's place to our place, to bring these goods, we spend transport expenditure, carriage expenditure. We purchased, and to bring these goods to our factory, we are spending this expenditure. So this expenditure is known as carriage on purchases. Carriage on sale means what? We manufactured a product. Now we are going to deliver that product to customer's house. We are only offering free home delivery facility to customer. So we incurred carriage expenditure. We are selling the goods to customers. In that process, we are incurring carriage expenditure. So this carriage is known as carriage on sale. Here, we purchased raw material. We brought that raw material to our place. Then we manufacture. Means carriage on purchases. This expenditure is manufacturing related expenditure. Means carriage on purchase is a direct expenditure. And after manufacturing the product, while selling the product to customer, we are incurring this carriage expenditure, carriage on sale. So this is after manufacturing now, means indirect expenditure. So direct expenditure we have to show in trading account debit side, indirect expenditure in P&L account debit side. Therefore, carriage on purchases, trading account debit side we have to show. Carriage on sales, P&L account debit side we have to show. Carriage on purchase is also known as carriage inward because goods are coming now. Carriage on sale is also known as carriage outward because goods are going from our firm. Sometimes he gives only carriage word. There is no clarity here. Carriage on purchase or carriage on sale. Then our assumption is carriage on purchase. Means direct expenditure. So remember, carriage, carriage on purchases, carriage inward. They come under trading account. Carriage on sales or carriage outwards. In P&L account you have to show them. To carriage on purchases, 2,000 rupees. Next, lighting, indirect expenditure. Buildings, asset. Rates and taxes, indirect expenditure. Sundry debtors, asset. Furniture, asset. Cash in hand, asset. Bills receivable, asset. Stock, closing stock. Because in brackets he has given on 31st March 2021 on closing date. So closing stock we need not to show here, because instead of ordinary purchases, we have taken adjusted purchases. Come to credit balances, only one income now, that is sales. Sales income is 36 lakh rupees. Purchases on debit side you are writing, sales on credit side. By sales, 36 lakh rupees. Everything we are written in trading account. Finally, find out the gross profit or gross loss. Observe, credit side total is more than debit side total. So gross profit comes. Credit total 36 lakh rupees minus debit total 34 lakh 98,000 rupees is equal to 1 lakh 2,000 rupees. This 1 lakh 2,000 is known as gross profit, because income is more, expenditure is less. So difference is profit only. In trading account, that profit is known as gross profit. We said we have to write that answer where the total is less. That side. Debit side total is less. Debit side, write down gross profit amount. For this, write down to gross profit. Write down the total. Trading account is completed. Next, profit and loss account. In the same table, we have to continue now. First, this gross profit you have to bring on opposite side, credit side. By gross profit, 1 lakh 2,000 rupees. Debit side, indirect expenditure. Credit side, indirect income we have to show. Salary is 21,000 rupees. Salary we pay to employees. Employees work in office. So office related expenditure means administration expenditure, indirect expenditure, P&L account debit side. Two salaries, no adjustment. So amount in outer column. Next, carriage on sales 2,500. Indirect expenditure now, P&L account debit side. To carriage on sales 2,500. Lighting 1,500. If he gives a factory lighting, then it is direct expenditure, because factory related expenditure is direct, trading account debit side. But he has given only lighting. So our assumption is this expenditure is related to office, godown, showroom, indirect expenditure, P&L account debit side. To lighting 1,500 rupees. Buildings, asset, rates and taxes 2,000 rupees. It is not related with the manufacturing process, no? So indirect expenditure, P&L account debit side. To rates and taxes 2,000 inner column, because he has given one adjustment. Rates have been prepaid to the extent of 600 rupees. Prepaid expenditure means next year amount now we paid, in current year we paid. Current year is 2020-21, because last date of current year is 31st March 2021. So starting date is 1st April 2020. So for 2020-21, if you want to know profit or loss, only 2020-21 related expenses and incomes we have to show here. If any other year amounts are included, then we have to subtract them. So in rates and taxes 2,000 rupees, next year amount 600 is included. Next year 600 we show in next year. So we have to subtract this 600 minus prepaid 600. In outer column remaining amount 1,400 rupees. Sundry debtors, asset, furniture, asset, cash in hand asset, bills receivable, stock assets. Come to credit. Capital, bills payable, loan, sales, discount. In credit column, discount is given. Means discount received. Credit side. Amount 2,000 rupees. No adjustment. Next, commission. In credit column of trial balance, commission is given. Means commission received. You know trial balance rules. In debit column, he gives expenses, losses, assets. In credit column, he gives liabilities, incomes, gains. In credit column, commission is given. It cannot be a liability. So meaning is commission received, income, indirect income, credit side of P&L account. By commission, 500 rupees. Sundry creditors, liability. Come to adjustments. Rates have been prepaid to the extent of 600 rupees. Completed. During the year, bad debts amounted to 2,500. Bad debts means debtors, means they have to pay money to us, to the firm. Bad debt means money is not going to come. So debtors are not going to pay 2,500. It is a loss. Losses on debit side we have to show. Two bad debts, 2,500 rupees. Next, a provision at the rate of 5% has to be made on debtors. This is provision for bad debts or provision for doubtful debts or reserve for bad debts or reserve for doubtful debts. Bad debts means from debtors money is not going to come. Confirm loss. But a provision for bad debt means money may come, may not come. So in accounts, we follow concepts and conventions. No? There is one convention known as prudence. What this convention says, expected profits we should not record in the books, but expected losses we have to record in the books. So provision for bad debt is one expected loss. If debtors are not going to pay the money to us, it is one loss. We are expecting that 5% of these debtors may not pay the amount. So expected loss we have to show on debit side. 2. Provision for bad debts. Amount is not given, 5%. You have to calculate on debtors. Debtors amount is 40,000 rupees. Debtors in inner column and bad debts are also given in the adjustment now. Means these bad debts first we have to subtract from debtors. On remaining debtors only we have to provide provision. Minus bad debts 2,500, 37,500. This is the final debtor amount. On this provide 5% provision. 37,500 into 5 by 100, 1,875 in outer column. Buildings have to be depreciated at a 2% and furniture at a 10%. Building, furniture are to be depreciated. Building, furniture, both are fixed assets. No? When we use fixed assets continuously, their values decrease. It is known as depreciation, loss. Debit side we have to show. 2. Depreciation on buildings. Building value 1,35,000 rupees on the 2%. 2,700. Next furniture. Furniture value 30,000 rupees. On furniture 10% depreciation we have to provide. 3,000 rupees. So everything we have written. Finally find out the totals of two columns. Credit amounts. These three amounts total 1,04,500. Debit amounts total is 36,475. Difference is 68,025 rupees. This is profit or loss. Credit side we wrote incomes. Debit side expenses. Income total is more than expenditure total. So difference is profit. We said we should write where the total is less. Debit side total is less. Debit side write down this amount. For this write down net profit. Two sides write down highest total. With this P&L account is completed. Next balance sheet. Balance sheet of Mr. Ramlal as on 31st March 2021. This is the heading. Liabilities amount, assets amount. Balance sheet is not an account. It is only a statement. Therefore, don't write DR, CR symbols. Don't call this side as debit side. It is not a credit side. Liability side, asset side. First trial balance debit column. Bank 7,500 means bank balance. Cash at bank. This is an asset now. Asset side. Purchases, salaries, carriage on sale, carriage on purchase, lighting. Building 1,35,000. Building is an asset. Asset side. Depreciation is there now. Depreciation we have to subtract. In P&L account we calculated depreciation amount 2,700. Remaining amount in outer column 1,32,300. Next rates and taxes. Sundry debtors 40,000. Sundry debtor is an asset. Asset side. Adjustments are there. Therefore amount in inner column. Two adjustments he has given. Bad debts, provision for bad debts. These two we have to subtract. First bad debts we have to subtract. 2,500. Next provision for bad debts. In P&L account we calculated now 1875. Remaining amount in outer column 35,625. Furniture 30,000. Inner column, because depreciation is given, depreciation minus. In P&L account we calculated 3,000 rupees came now. Remaining amount in outer column 27,000 rupees. Cash in hand 1250. In our firm we have 1250 cash balance. It is an asset side. Cash in hand 1250. Bills receivable 7,500. Asset 7,500. Stock 3,06,250. Stock on 31st March 2021 means at the end of the year, closing date. So this is closing stock. Asset side 3,06,250. Debit column completed. Come to trial balance credit column. Capital liability side. In inner column 2 lakh rupees. We got net profit now. We have to add to capital. If net loss comes, we have to subtract. Plus net profit 68,025. P&L account answer. See, drawings are given? No. Therefore, final amount in outer column. Bills payable 50,000. Liability. Loan 1 lakh rupees. Liability. Sales discount commission sundry creditors. Liability 1 lakh rupees. Trial balance amounts we have taken. Not only from trial balance, adjustments also we have to take here. See, adjustments. First point, rates have been prepaid to the extent of 600 rupees. Adjustment amounts 2 times we should write. One time in trading or P&L. Second time in balance sheet. Prepaid rates. Next year amount now only we paid. So without receiving benefit, we paid money to other party. Then in future, from other party we should get some benefit now. So benefit should come to us. Means it is an asset. Asset side. Prepaid rates 600 rupees. Next. During the year, bad debts amounted to 2,500. Bad debts we have subtracted from debtors. A provision at the rate of 5% has to be made on debtors. That is also completed. PBD we have subtracted here. Buildings have to be depreciated at 2% and the furniture at 10%. So depreciations also we have subtracted. So all adjustments also we have taken. Finally, find out the totals of two sides. Liability side total 5,18,025. Asset side also same. Thus, in balance sheet, two sides we should get equal amounts. Then only our problem is correct. So this is all about 9th problem from final accounts topic. Hope this video is helpful to you. Thank you.